Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As you can see, the Australian dollar wavers just ahead of that key level of 72.60 as the upside momentum continues to fade after recent multi-year highs. Stronger Chinese inflation data offered limited support, with CPI and PPI both beating expectations, while traders instead focused on a busy domestic week ahead featuring the Australian federal budget, the wage price index and inflation expectations as well. Ongoing Middle East disruptions evaluated energy prices and safe haven demand for the US dollar, but still, overall though, continues to limit the rally for the Aussie. With economic calendar light this week, eyes will be on President Trump and also the Chinese president, which could push Iran closer to a deal. Looking at the technicals, are mixed and a little bit to the bearish side, as we can see here. If we get a break of the midway point, which could see the move below 72 cents and down to around 71.65 and reassess. Euro also coming under a little bit of pressure after recently looking above the level of 117.60, but finding the resistance there has now put a little bit of a weight on the support and looking for a breakdown, which I feel could see a move back towards the region of 116.5 and reassess. Once again, dollar yen pushes higher and keeping a neutral stance, but still be aware of a sharp downturn. We still lurk around the intervention levels and therefore could once again see this pattern emerge. It always sees the bulls get a little bit overconfident, and we're still trading into the fourth inside range day from that heavy sell-off. So in a sense, that's why I'm neutral. Nevertheless, let's see if the market does get a rejection anywhere from where we are or on towards 158. Sterling coming a bit weaker, looking eyes on the support area, seen somewhere around the lows of 135. I am bearish as this pattern struggles towards that 136. Let's see if these technicals do break down and the bears come heavily in force. Finishing off with commodities, where I hold a neutral view, but still finding that gold finds demand on dips, and from there, the market rallies. Nevertheless, we're still holding sort of a bullish pattern since the break of this trend. But as I say, I'm neutral, but I'm still being a little bit optimistic in case we get further gains. And also oil, well, the market is still trading inside the fourth inside range day, but nevertheless attempting to recover, which could see a move up to about $98 a barrel. But I feel overall, though, it's very risky to trade this market due to the Middle East. So maybe keep to a neutral bias and wait for the bigger areas, anywhere above 104 or closer towards the $80 region as a potential trade area. That's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the day.